Hello friends, welcome to our channel. Friends, we are going to start a important subject with you. As you can see written here, Indian economy. So why economics is important? As we all know that without economy it is impossible to crack any competitive exam, and it is quite expected from a would-be bureaucrat in future who is going to frame policy for our country, have some knowledge about how our economics is working. I have seen many students find economy very difficult to understand. So it is a well-intended try from our side to comprehensively discuss economy with you. And after completing this series, I can assure you, you will be able to answer most of the question asked in WBCS or even in UPSC preliminary exam. So let's know what economy is. Many economists had defined economics in different manner, but end of the day, everyone says about same thing: limited resource and unlimited demand. Look, human need is unlimited, but Earth is limited. We cannot meet all our need with these limited resources. So there is need to study and plan how this limited resource can meet our unlimited demand. If we take example of us, many of us living in Kolkata or Delhi or any other city for study purpose, and we get a particular amount of money from our parents. One may get 5,000, 10,000, or 20,000. Whatever amount we get is limited. But what is about expenditure? It is really unlimited concept. Any amount we spend here is there is no limitations. So you will divide this money in such a way that you can maximize your satisfaction. So here you are basically studying how consumer is going to maximize the satisfaction, and this satisfaction in economy is known as utility. So next point, if you are reaching to the macroeconomic level, you can think about RBI and money market. Again, the same concept: limited resource and unlimited demand. Take the example of money market. You can see the demand side of the money is unlimited. Okay, so everyone demanding more and more cash. But if you take the other side, RBI is not printing unlimited money. RBI is printing limited money, and then RBI is trying to meet the unlimited demand. Think about the fiscal policy, the policy of government. Again, the same concept: limited resource, unlimited demand. Government has to spend in many dimensions like health, education, agriculture, and other sectors. Demand is unlimited here, but government has limited resource. So we can just simply say economics is a subject where we study how to utilize limited resources to meet unlimited demand of the economy. So hope it is clear now what economics is. Now come to economy. Economy and economics are two different things, and any particular area or country or state where the economic activity are happening is called economy. So this is all about the economics. Next, we will move to the topic national income. For that, we need some basic concepts, and then gradually we will move to the national income. So let's see what income is. Uh, Look, every one of you have some amount of money. You can you say that this money is your income? So if you are really honest and if you are not working, and you will say this, say that it is my parents' income. The moment you are saying it's my parents' income, this simply means there may be some reason for which you cannot claim it's your income, and the reason is simple. The reason is your parents rendered the service, or they produced good and service, and then they sold this in the market. Then they are receiving the money or income. For them it's income, but the money which is with you, uh, for you it's not income, it is transfer payment. So we can simply say income is what we get either in form of money or kind after rendering services or selling goods. So it should be in bilateral form. It should be in earned sense. And transfer payment is unilateral, or it should not be in earned sense. Transfer payment is the money or kind without rendering any services or selling goods and services. And there is two type of income: real income and nominal income. uh, Let us consider a person joined a firm and receive income of 10 rupees, 10 rupees or 100 rupees suppose. And let us consider the price level of the country is 10. So this money you can buy, from this money you can buy 10 unit of goods. And what if the price level increase to 20? Then you will get 5 unit with that 100 rupees. So in both the case you have the same price. In both the case you have same price, but you are getting, uh, first case you are getting 10 unit of good, and in second case you are getting 5 unit of good. So income in terms of money is nominal income, and it does not show the real picture, as the 100 rupees in both the case does not show the real picture. uh, the real picture seen by them is the how much good you can get from this money. So income in terms of money is the nominal income, and income in terms of goods and services, this is the real income. And see now what inflation is. Inflation is a process of sustained increase in price level. The rate at which price increases is known as inflation rate. For example, we can take price level increase from 100 uh, 100 to 110, right? So here the increase in price is 10 rupees. So we can say inflation took place, and the percentage at which inflation take place is known as the inflation rate. Income is economics is the vMPL, right? So where the income is economics is this basically: W is equal to P into MPL, and here P stands for price of the product, MPL is the marginal product of labor, and W is the wage. And so you know what is the price? What price is? The price is simply what cost, and MPL the marginal product of labor, the marginal product of labor. So first you understand this. So let us consider in any farm you are using labor. Suppose 10 unit of labor is working on a farm, and they are producing 100 units of good, and you join this farm. Now what is the amount of what is the number of labor working in this farm? Is number of 11. You joined just, and suppose just assume this farm is now producing 110 units of goods, and then you can see you joined, and the production is increased. 10 unit of production is increased. So this 10 this 10 is your MPL. Your contribution to the farm is this 10 unit. So, and now suppose the price of 1 unit of good is 100 rupees, and this you are producing 10 unit of good. So 10 unit of good, the price of 10 unit of good will be 1000 rupees. So 1000 rupees will be your wage, or this is your salary. So if someone say that my salary or my wage is 1000, this simply means that his or her vmpl is 1000. Now just add one more thing. In economy there are four factors of income. It is the land, the labor, capital, and entrepreneur. The land will get rent, and labor will get compensation of employee. Compensation of employee is basically the wage plus and the other compensation the farm giving you. Suppose one may get health facility and education for education facility. Yes, transport cost. So these all are combined is your compensation of employee. And the capital will get interest, and the entrepreneur who is arranging all four factors, he will get the profit. uh, so just just think that if all factors together all factor together they produce goods worth of 200. So it is the value of output produced by this four factor. Definitely it is the factor cost. So it will be the factor cost. So it is known as the value of output. So it is the value of output in factor cost, right? So it is the value of output in factor cost. So why it is known as factor cost? Simply in on answer that this value includes all four factors. So that is why this is known as factor cost. And if we add tax with this four factor or factor cost, it will be the market price. So what is tax? Tax is a compulsory legal payment only government can impose. So maybe the government means maybe the state government, central government, in any other local government can impose tax. And there is two type of tax, direct tax and indirect tax. And what is direct tax? Direct tax is that government imposes any tax to any entity, and the entity is not shifting the tax to any other entity, and the tax is paid by the entity himself. The entity himself paid to the government. That is the direct tax. And what is indirect tax? Indirect tax is the simple the opposite of it. The government is imposing tax to any entity, and the entity shifting tax burden to other entity. The entity shifting tax burden to other entity. Suppose the government is imposing tax to Mr. A, and A is uh, A is just transferring this tax burden to Mr. B, and B is paying the tax to the government. So the tax A is not paying directly. A is uh, imposing the tax burden to the B, and B is paying. So this is uh, paid indirectly. So this type of tax is called indirect tax. So market price. So what is market price? Suppose 100 rupees is factor cost. Suppose 100 rupees is factor cost. This is earned from these four factor we have just learned. And government had imposed tax of 10 rupees. It will be indirect tax. The farm is not going to pay it directly. The tax burden will be transferred to the normal public or the consumers. And maybe in some cases government may give subsidy to the farm. So the 100 rupees is the factor cost, and the 10 rupees is the government tax or indirect tax, and government is also giving 2 rupees subsidy. And subsidy may government may give or may not give. There depends on government or farm. So these 100 rupees and 10 rupees is 110 rupees, and if you subtract 2 rupees of subsidy, we'll get 108 rupees. So these 108 rupees is our market price. So market price, we can say market price is equal to factor cost plus net indirect tax. And what is net indirect tax? Net indirect tax is the indirect tax minus subsidy is your net indirect tax. That is the actual amount of tax the government is reducing the tax burden actually by subsidy. So market price is the factor cost plus net indirect tax, and factor cost is equal to the market price minus net indirect tax, and net indirect tax we can say also the market price minus the factor cost. So we can by this way we can get the net indirect tax. So that's all for today. In the next class, we will discuss about the national income. We'll discuss how the government calculating the national income. So thank you for being with us. Have a nice day.